This is the financial news for the week ending with markets closed on January 18th. Over the week, all indexes are up with a strong week in North America. The 4-week returns are all very strong, but this is due to the market drop and the volatility at the end of 2018. The only indexes to have over a 1% gain in the 12-week period is the TSX and the Stock 600. The TSX did pretty well with just about a 3% gain, with the Stock 600 just above 1%. Looking at currencies, the CAD is up this week, as well as the USD. Yields are also up on T-bonds, with most notable gains being in the Canada 10-year Treasury and the US 10-year Treasury. But this is due to a large drop in yields over the past 12 weeks. The yield curve is very flat at the moment, with the 10-year Canada and the 12-month having a spread of only 134 basis points and the US spread of 205 basis points. Looking at commodities, oil has continued its rise back to the high prices. This may be a result of OPEC having issues and their future uncertain. This can be seen through them failing to set a new meeting date this past week. WCS did fall this week, but still has a 4-week increase of over 46%. Natural gas also had a strong week, but that still isn't the high of about 4 weeks ago. And lumber is up 8% and gold is slightly down. In Canadian news, home prices fell again in December for the third straight month. It was a 0.3% drop, led by falling prices in Edmonton and Vancouver. This is the smallest annual gain at 2.5% since 2019. This puts into question if Canada's housing market will continue to increase, with Vancouver's prices falling. 2018 was also the introduction of B20 rules for mortgage. This puts pressure on the market with higher interest rates. A survey of Canadians was done asking their opinion on oil and pipelines in Canada. 6 out of 10 of the people responded said that they believe the lack of pipelines puts the country in a crisis. Talking about crises, the World Economic Forum released a report warning of a coming global crisis. They said that the world is slowly walking into a crisis and has been for a few years. Canada's inflation number came out in December at 2%, which is the target for the central bank. In company news, Husky is walking away from the hostile takeover of MEG Energy. Their shares rose about 17% for the week and opened 11% higher on the day of the announcement. Shaw released their earnings report with a 68.5% increase in quarterly profits, which resulted from subscriber growth. The other communication services companies are going to report their earnings in the coming weeks, and with the increase in subscribers at Shaw, it would be interesting to see how the other companies fare. In U.S. news, the U.S. shutdown continues and reaches its 30-day mark, extending its lead as the longest shutdown ever. The economic concerns of this shutdown are on the impact of GDP. It's expected that it will have a large negative impact on GDP for the quarter. The automotive industry is in a rapid change at the moment, with sedan models reaching a record low of 30% of the market. SUVs have been steadily taking the market share from sedans. This also comes at a time where 3 major automotive companies are increasing their investment in electric cars. They may have to change some of their focus and maybe start looking at electric SUVs. On the other hand, electric cars might bring people back to buying sedans. Overall, the automotive industry had a strong manufacturing production month in December, leading the manufacturing production increase of 1.1%. An interesting piece of information I found was U.S. alcohol volumes have continued to fall in 2018. That makes 2 straight years of less alcohol purchases. This is driven by less beer sales and could be a result of weeks of less consumer focus on healthy products, as well as the legalization of weed in some states. U.S. inflation increased 1.8% in November. Now, this is actually slightly concerning because of all the rate hikes, and the expected inflation was going to be high. Unemployment is very low, and the Phillips curve still seems to be out of whack. Some are questioning whether the increase in rate hikes were the right decision and if they should continue to do so. The Fed also released an interesting report this week talking about how student loans have resulted in less home purchases. With the increased level of student loans, individuals are unable to get a mortgage and are trying to pay off their loans first before they move into the housing market. Some of the concerning news for the week is the US and China trade tensions. This also comes at a time with a lot going on in China, but I'll talk about that a little later on. With the arrest of the Huawei technology executive in Canada, China is putting pressure on Canada by arresting and putting a death sentence on a Canadian. The US condemns this, resulting in increased tensions between the two nations. Interestingly, though, a few days after, the Wall Street Journal reported that the White House officials are considering rolling back some tariffs on China, but this was later denounced by the Treasury Department. One analyst is very bullish on the US market for 2019. He forecasts that US companies with increased debt financing will use the funds to buy shares back as well as mergers and acquisitions. The analyst believes that the bull market will continue to be strong after the recent volatility. I question whether this would be the right decision for companies. It seems like a strange time to increase debt with the rising interest rates. I also question whether using the money for share buybacks makes sense, considering by looking at the PE for the indexes, it doesn't suggest that the market is overall undervalued. With all the news lately concerning sexual harassment, some of the largest pension funds are asking for corporations to be forced to disclose costs related to sexual harassment. It's an interesting idea, but seems relatively pointless in the grand scheme, with most of it probably being immaterial. The benefit I do see is for looking at the corporate governance of the company. There was a lot of company news in the US this week. First up, Facebook is planning on investing $300 million in local news over the next 3 years. This comes at a time when Facebook has a bad image concerning news and are planning on remedying that. PG&E are planning on filing for bankruptcy protection after the increase in liability resulting from California wildfires. Newmont Mining Corp is purchasing Goldcorp Inc. in a $10 billion deal and will become the world's largest gold producer. Netflix released their earnings this week with mixed results. Interestingly, though, a few days before it was announced that US prices were going to increase to $13. US banks also released their earnings this week. They were pretty mixed. Citigroup, Bank of America, and Goldman all had strong quarters, while Wells Fargo, JP Morgan, and Morgan Stanley had mixed results and down to pretty terrible results, with Morgan Stanley's net revenue down 10%. Goldman had the best day for trading in a decade, though, up 10%, and overall, the stocks were up. The interesting part of the earnings release, though, was the decrease in revenue from bond trading that happened. All the companies reported decreases in trading from bonds, which is pretty strange when you consider the market volatility in the past few months, and you'd think some of the people would be moving more into bonds from stocks. YouTube announced, though, that they are removing dangerous videos resulting from the Bird Box Challenge videos. Also, T-Mobile decided to start buying ads again on YouTube after leaving the platform just over 2 years ago. Tesla had a rough week this week and announced that they are cutting their workforce by 7%, and then their shares took a pretty downward trend of about 10% down. Moving on to the Europe news, it was a busy week for Brexit. The Brexit deal was defeated in Parliament, while there are only 10 weeks left until the country leaves the EU with no deal. After the defeat, a no confidence vote was held, and Prime Minister Theresa May won. In Germany, the government passed a bill that in the event of a hard Brexit, Germany will continue to treat Britain as an EU member in a 2-year transition period. It is important to note, though, that a lot of analysts forecast that Britain won't leave the EU and that they'll do another vote. A report was released asking European business leaders what their biggest fears for the coming years. It was pretty interesting. Their number one fear was the breakup of the EU, and then second came with Brexit concerns. Another concerning news too is that Italy put out some warning news by cutting their GDP forecast for the next 2 years, and it suggested that the company may be at the start of a recession. This is interesting when you consider what the World Economic Forum has said about a coming crisis. What makes this more concerning is the issues related to China. They released their trade numbers, and imports dropped 7.6% and exports dropped 4.4%. In the wake of the news, the government has said they will help the economy with tax cuts and monetary policy support. I am unsure whether this will actually work after reading a Bloomberg article that discusses the concerns of a crisis in China over high debt levels and increasingly amounts of bad debt. It was estimated by S&P that Chinese municipalities have hidden debt of $6 trillion. It is also estimated that 24% of the credit has gone sour at an amount of 8.5 trillion. Hong Kong had a crazy day this week, with five stocks down over 50% in one day, with the largest falling 81%. Overall, this week has had mixed results. North America has definitely been the winner, and Europe has remained relatively flat, while Asia is definitely the loser for the week.